Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and we have got plenty lined up on the show. So let's get straight to the action. Focusing on earnings first. Hindustan Zinc, well, they reported a pretty good set of numbers. The revenue as well was up by close to around 20% in comparison to a year ago. To help us out with what's the way ahead, we're joined by Mr. Arun Mishra, who is the CEO and whole-time director of the company. Hi, Mr. Mishra. Thanks a lot for joining in. Always a pleasure speaking to you. Well, given that Trump's tariffs and the global demand-supply dynamics, what could be the broad zinc price range that you're working with?
So if you look at global situation, US consumes about 700,000 tons of zinc, which is hardly less than a million ton out of 12 million ton production world over. Of course, US has put some amount of tariff on 25% tariff on steel and aluminium coming into the country. So there are three options. One, in the near term, 3 months to 6 months, nothing more happens in the on the tariff side. 90 days freeze gets extended to say 180 days. In that scenario, the world would reset to the new level of doing business with somewhere 10% tariff, not impacting much on the productions or the costs. And we see a price range of $2,500 or $2,600 to $2,750 per ton remaining unchanged for maybe 6 to 9 months. Second option, some rollback happens from US side and business goes back and starts usual, then we would see a recovery of price earlier towards the third quarter, maybe around November, December or so. Otherwise, I see very clearly if this stalemate continues and maybe China price, even if it is corrected by 70-80% of the current tariff, meaning that suppose China tariff remains at 25%, January onwards, you would see a better price of $3,000 per ton kind number.
All right, take that point. That's clear range that you've given for the next 6 months on zinc. But silver prices, they've been fairly volatile as well, holding around $31, $32 per ounce. While gold has surged away, do you see silver prices, focus there as well? Where do you see them stabilize?
No, silver is in for a better time. It's a timing gap between the gold peaking and silver peaking. Immediately, people are rushing to gold because of the lack of certainty in the money market. So that rally will continue for some time, but then it will be followed by silver. A current of $33 to $34 per troy ounce silver, we see a clear future going up to $36, $37 per troy ounce. And yes, further better times in silver will come. Remember last year when I said silver should go up to $33 when it was actually at $29, $30 a ton, all of us thought it will take much long for silver to come to 33. Now that's the reality.
All right, Mr. Mishra, could you outline what are the volume targets for FY26? And also, could you give us an update? How is the FUMA functioning?
So the FUMA plant has been commissioned. Both furnaces are running. They're running currently at 75-80% of the capacity. Another 1 month down the line, they will run at full capacity and add up to 30 tons of silver in a year. So that's done now. That's behind. That difficulty is behind us. Last year, we finished at 1,052 KT of metal, about 1.052 million tons, if I can say so. We know we had an opportunity of another 20-25 KT. Also, the new roaster coming in, that should come on May 20th, will add another 40 KT of metal. So altogether, next year, 1.1 million ton metal is easy to make, and we are all gunning for that.
All right, so what is the pricing band, though, you're looking at if you have to increase the silver production?
Silver, we will focus operation mostly on zinc plus lead mode all through the year. So we will not be silver specific, and we will look at silver around 700 to 710 tons of silver. But if silver prices go further higher and zinc comparatively becomes less attractive, we may change our decision, reduce metal production and increase silver production. We'll look at that as the situation evolves.
Yes, sir. So, given that silver you're guiding closer to around 700 tons, but you're looking at how the situation evolves, then what will be the guidance? What is that price band you're looking at between silver and zinc to focus more on silver, if that's the case?
No, so coal, again, we have done extremely well in making domestic coal available. In the Q4, we had 46% mix of domestic coal in the total coal, and annually we are at 44%. Just a couple of years back, it used to be hovering around 10%, 15% only domestic coal. So we have come up thus far. And second, our RE power mix, renewable power mix has been 13% this year. Q4 has been 15%. Next year, it should be 30%. So given all this, I'm sure that our cost numbers, currently we have done about $1,050 per ton. We should remain closer to that and maybe $10, $15 or $20 lesser.
All right, sir. Could you give us an update on unlocking value of the business? That's something that you have spoken at in the past.
No, it is happening, not in the route that we prescribed. When we spoke that our valuation was 16 billion, but in the meantime, commodity rally happened and we went up till about 28, 29 billion. Then we came down to 21 billion, and we are now focusing on growing our bottom line. That we should be expanding by another 1 million ton. That project, part by part, we should be able to make announcement in another month's time. Starting June onwards, within a span of couple of months, we should be making full announcement, maybe 3 phases of announcements, but we'll be announcing up to 1 million ton expansion. So that will double our EBITDA, and with the 8 times multiple, our valuation will go up further. So the original, even without demerger, we can do that. But I'm sure when the expansion happens, silver number will go to about 1,200 to 1,500 tons. Demerger will become a reality.
And what about the capex plan for FY26 with and without the demerger?
No, as of now, our guidance capex is $225 to $250 million, which is mostly for tapering of expenditure of the earlier projects of fertilizer and roaster and maybe some equipment replacement and some amount of money for debottlenecking. Once we make announcement for growth of 1 million ton, that will come with its own capex. The numbers are being calculated. Rough cut, as I had spoken earlier, enter 1 million ton, maybe about $2.5 billion. So as we complete the calculations for every phase, first phase could be 0.3 million ton, and whenever we are ready by in a month's time, we will make that announcement to take us to 1.5 million ton.
So we'll wait by for the capacity enhancement announcement, but for the time being, you're telling us ramping up capacity and increasing capacity is the focal point. Final question before we let you go. Any update of an OFS from the government of India? Are they looking to sell some more? What about Vedanta? Will they as well look to dilute any stake?
No, nothing. I have not heard anything from both sides.
Appreciate you joining in, Mr. Mishra. Thanks a lot for giving us that quick update and also outlining the way ahead. Well, for the time being, we slip into a short break. On the other side, we'll focus on the primary markets. We'll be joined by Tarun Mehta, the Executive Director and CEO of Aether Energy. Stay with us.
Welcome back. A 200-point run on the Nifty right now, 24,250. That's where we are, and a large part of that is Reliance. Reliance reported a healthy set of fourth quarter numbers led by the consumer business, and the stock surging away, currently up 4%, so the top contributor to the gains on the Nifty today. But today also marks the first main board IPO for FY26, with his Aether Energy's near 3,000 crore IPO that opens for subscription, closes on the 30th of April, comprises of a fresh issue of close to around 2,600 crores and an offer for sale by the promoters as well. Tarun Mehta, who's the Executive Director and CEO of Aether Energy, now joins in to discuss the IPO launch in a lot more detail alongside the business as well. Thanks a lot, Tarun, for joining in. Good luck for your D-Street debut. Just wanted to understand a couple of things before we move ahead. You know, one, you've earmarked about 40 crore for debt repayment, and your last known debt is over 1,140 crores. So post this IPO, your debt still remains at 1,100 crores. So what's your debt repayment plan on that? That's point number one. And secondly, I just wanted to understand the rationale for capacity expansion, because you currently have around 4.2 lakh vehicles in terms of capacity, but you're able to sell only about a lakh point 10 at best annually. So while you're at 35-40% capacity utilization currently, why are you looking at nearly tripling your capacity?
Right. So thanks for having me here. So first on the debt piece, just to clarify, we actually have roughly about 500 odd crores of debt, not 1,100. That 600 crores was a convertible instrument that converted before prospectus. So that's just one point. We feel pretty bullish about our accruals in the coming quarters and years. If you notice our FY25 numbers, 3-quarter data, there's been a massive turnaround story. Our profitability our EBITDA has improved quite materially. Our PAT has improved quite materially. Losses have come down despite growing volumes almost 45% in the same period. So we're feeling bullish, particularly because our unit economics and something that we've been very focused on at Ather has started to pay off really beautifully. Even without incentives like PLI, our margins have doubled from 9% to 19% by Q3 FY25 year to date. So this massive growth in margins and reduced losses and the surge in volumes is what's giving us the confidence around our ability to repay debt in the coming years. So first, not 1100, 500. Second, on capacity utilization, same on the volume point, just to give you 2 data points. Our capacity is about 35,000 units per month. But in the last 1 year, this surge has been amazing in volumes. We launched our new family scooter, Rista, last year, and that's really put our volumes up there. To give you some context, Festive 23, October 23, we did about 10,000 units. Festive 24, October 24, we did 21,000 units out of a total capacity of 35. So you will notice that this is nowhere close to the 1 lakh annual number that you know from the RHP date. By the RHP, by our prospectus date, things have changed quite materially. And the reason they've changed is because we've launched our mainstream product, Ather Rista, our convenience family scooter, this which is really driving our volumes, which is really driving growth across the country, particularly in the non-South markets. South, Ather has always been a very strong player. In fact, in recent months, we've been market leaders with 25% market share in many months. But with the new product, even in markets like Gujarat, Maharashtra, we have seen market shares of 12, 15, 25% in the last 6-9 months. So that's what's giving us the confidence.
Okay, all right, Tarun, but you have to be extremely confident if you're going to be increasing capacity by that sort of range. But we take your point on board. You're bullish on prospects, so let's see how that goes. But on market share, where do you see your market share headed from here on?
Right. So again, market share also, FY25 has been a very successful and pivotal year. While at the start of the financial year, our market share was roughly about 10%, 9-10%, which is what probably closer to a historical average. But with the launch of Ather Rista in Q2 and its subsequent ramp up over Q2, Q3, and until recently, we've seen our market shares go from roughly 10 to almost 15% in the recent months. In fact, you can see Vahan data even today, and we are very close to 15. So market share has been trending in the right direction. We are clearly growing faster than the market, which is what we've always estimated and hoped for with this new product. And we've been able to do this while growing margins and being very, very, very disciplined with our pricing and our overall profitability.
Okay, all right. Just one more point I wanted to make. With regard to your gross margins, as you mentioned, they have improved. They have improved because of the various measures. That's correct. I've got that on board, and that's good on you all because you have taken a lot of focus out there on the cost-cutting measures. So kudos on that. But one metric that the street will track, since you're going to be a listed company soon, is going to be the operating cash flows. Those are still negative. When do you see that turn into positive?
So a few things that investors need to understand about our business. Unlike some of our industry peers, we are not very high on capex. We are a very firm believer. In fact, we have written a long section on this in the prospectus that we are very, very, very focused on capital efficiency. So, for example, Ather is not getting into certain endeavors which are very high on capex, like, for example, cell manufacturing. These are businesses that we believe are better run by suppliers. We are very razor focused on keeping our cash focused on things that give us a great ROI. These are technology, product, design, brand. These are things that really give us the maximum bang for the buck. Building a premium brand like Ather, that's what we focus our money on. For example, our distribution is all with dealers, so we don't have to put our capex or opex there. Ather is not into cell manufacturing, so that saves us thousands of crores of capex. And despite that, we've grown the kind of margins that we already have. So we expect our gap from EBITDA to PAT and cash break even would not be substantial. It'll be quite a healthy, quite a small period. And that also in recent months has continued to trend positively, especially when you look at the operating level.
So do you turn EBITDA profitable anytime over the next couple of financial years if you have a targeted financial year for that? And since your operating cash flow will follow that, one assumes that maybe the year you turn EBITDA profitable is the year you turn cash flow positive or profitable as well. Does that happen in FY26 or first half FY27 or towards the end of FY27? Because then you have the big capex coming on stream as well.
Right. So obviously, specific guidance I can't share. But what I can talk about are two things which are the cornerstones for achieving profitability in our business. First is unit economics, and second is how your volumes are trending. On unit economics, we've already, as I've talked about, gone from 9% to 19%, and that's even without production-linked incentives. But the big thing that gives me confidence are what's coming ahead on our margins, on our unit economics. So first, we are transitioning to lithium-ion LFP batteries for a healthy part of our portfolio. LFP batteries are generally cheaper compared to NMC batteries, which is what we use today. So they are expected to help improve costs. Second thing we've called out in our prospectus is that we are working on a new platform for scooters, which is called the EL platform. This is a more cost-effective platform compared to the current expensive aluminum frame platform that we use. So that's also expected to help reduce costs. Third is just our overall track record with our engineering. So Ather from day one has been a company very focused on its engineering. Like we almost believe engineering is our superpower because we've invested so deeply and so solidly in it. Both founders were engineers that began this company, both of them. So our track record on that is over the last 3 years and 3 quarters, our teams have delivered a 31% cost reduction for our product.
Got it.
So that's
so Tarun, your passion clearly shows through, but just one final question before we let you go and then, talk about your business when you list. First part, you've spoken a lot about your back end. In the front end, what is your expansion plan on retail? But more importantly, after sales, what is your expansion plan on services? Because what are the kind of service complaints which are outstanding right now? What's the outlook here?
Right. So until last year, Ather's distribution, our distribution was far more focused towards the southern part of the country because the product that we sold much better in south. So we kept a pretty tight control and we did not open a lot of distribution in the northern and the western markets. But with the launch of a family first product, Ather Rista, West and North audiences have responded really well to it. So our market share, all non-South markets has trended has almost, I think, doubled in this time period. Particular focus I want to highlight is Gujarat, where we went from 5% market share before the launch of this product to 25% market share. That success is what's giving us a lot of confidence to now expand into the hundreds of cities in the non-South market where our competition is already present. And we have not opened our first stores also. So a large part of our distribution growth will come from an expansion in the non-southern markets and adding more depth in the markets in south that we're already present in. So that's on distribution. In fact, I do believe very strongly yes, the distribution upside possible here that distribution might be a largest lever for growth in the short term. Okay. On servicing, again, by investing almost a decade in building a platform from scratch here in India with all IP here in India, I think what we've created is a very stable product and something we're very proud of its quality for. One thing that we achieved successfully is insisting that every dealer of ours sets up a service point in support of a sales point.
Got it.
The vast majority of our sales points have a service point at the back end, which gives our customers a lot of comfort that know where to get the vehicle serviced easily.
Okay, all right, Tarun, apologies, we're a little short on time today, but I'll tell you what, you'll have built a great product. All the best with regard to that. Now the test is with regard to how the stock market takes it. We look forward to having a longer chat with you on the day of listing. Thanks a lot for joining in. For the time being, we slip into a short break, come back, we continue our focus on markets.